Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Thursday, Halloween. I'm wearing the orange. October 31st, 2019, just after 3:20 p.m. Central Daylight Time. So this is where we're going to settle the stock indices. They'll reopen in about 10 minutes, start trading, and wherever they go won't matter. This will still be the settlement price. In the metals, an update today. So what was going on? Well, there was a move to the risk off. In other words, traders started buying bonds, notes, dumping stock indices, buying the metal markets, not the copper, but I'll explain that in a second. And the dollar did not get a bid, but the Japanese yen did. So it's a classic, and I use the word classic, risk off day. So where is that? Well, I think the traders are scared about a Bloomberg story that came out this morning where it did not sound very good to complete the U.S.-Chinese trade deal. Maybe they can get to a phase one. I use the word maybe. Phase two, the story was very, very negative on it. U.S. would have to remove all the tariffs, something Mr. Lighthizer said he would not do without a good check and balance on what's going on. So the market looked at that. It looked today at the vote at the House of Representatives to move forward with the impeachment inquiry, and now it's going to have to be more public. And the idea there is that they're hoping, they being the Democrats in the House, to get something to the Senate by Thanksgiving. I don't know if that can be done or not done, but the word impeachment now takes on much more meaning. I don't know if the president, if he gets impeached, can run to be president again. I was just reading another article that said he could. Well, maybe, I don't know if you're actually impeached in the Senate that you could run again. I think that if you're impeached and you win that, you could run again, but I don't know about impeached and you're found guilty in the Senate. I am going to find that out. All right, so when we look at these markets, today was one of these days where you threw stock indices into a tizzy off this news. It is not that the House vote went through as expected. I think what threw it off was the trade talk, and that seems to be an on-again, off-again theme. It's the last day of the trading month as well. That always creates an interesting time. But when we look at the weekly area chart of closes, you have one more day left this week. You're up 15.5 points, and that's still an all-time high close, even with the setback that we had today. Now, what I didn't like with the action today is, as you can see, you had an outside day up yesterday. The norm is that if you take out the low, for me at least as a chartist, if you take out the low of an outside day up, it's a sign that you've caught a group of longs, and the market often tries to work lower, oftentimes to the nearest of the 18-day average or the Bollinger Band, with one caveat. Go back through that high, then you had a false reading, obviously, and the market's doing something else. Now, yesterday I had one of these arrows over here pointing to the upside. It moves back now because you have gone through that low. And it throws this chart into a bit of disarray, not total disarray, but into a bit. It's still going to be the lower low. I can live with that. So I'm going to come back and say the swing line is still up. The market had a good day to the upside yesterday, gave back a chunk of that gain. The 18-day average is still well above the last break low. So if it were to pull back to the closest of a Bollinger Band or a moving average, well, the Bollinger Band can't be under the market. It'd have to be way down, and you'll see that in a moment here. It's the 18-day average of closes. So I'm fearful of that. I'm going to repeat again. One of the things I've learned over the years, if you take out that high, it negates the impact of taking out the low of an outside day up. Trend is still up, bias is up, and you still have the embedded reading. So this chart is still bullish as I'm reading it. Lose the embedded reading, it would be a sign that this is not a fluke and that the market, one of the moving averages, could well, I can't say they're going to, but could well be making a move towards each other. In the NASDAQ, you kept the embedded reading. The play today was not, N-O-T, not the same as we had in the S&P. Yesterday's low was not violated. It could be tomorrow, but it hasn't been. Therefore, the pattern is still higher lows, higher highs. This is certainly very much, as I read it, in the bull camp. Next target might be the 8180 zone, 8181 actually. We can call that 81, 82 even higher, as that's the upper Bollinger Band. If you take out yesterday's low, and that low was 80, 20, 50, that would get me back into that camp that's very nervous. I admit, the slow stochastic reads the day here, and reads the day here as the most powerful tool. So that's your leader in the market. When we come to the Dow, that is not what happened. The Dow took out yesterday's low. This was the outside day up. Shouldn't do that. When it did it, lost the embedded reading. That puts this market, in my opinion, on track for a potential challenge of the 18 to 100-day average of closes. Now, I want to come to the slow stochastic. You can see at a 75 reading. If we come back to yesterday, both numbers over 80, both over 80, both over 80. So we know we had the embedded reading. The only day you can get back the embedded reading is the very day after it, and it normally happens in quick succession. In other words, you'll see it happening fairly fast during the day. The fact that we're at a 75 reading, it can re-embed. Get down under 70, it's very rare. So if you get over the highs of Wednesday, be cautious here. This could turn out to be a trap and you're back up to the other part. And I say that because when you look at the Russell, it too kept its embedded reading. It did not have an outside day up yesterday, so its support zone is a combination of the 200-day, the 100, and the 18. Now, the 18-day average today got itself over the 100. Do you see that right here? Now the goal is for the 18 to get over the 200. We'll see if the market can do it, but that zone to me is the support. To get into it, you have to break through this low. That's a problem. That could do damage to the chart because you'd ruin the swing line of pattern of higher lows, higher highs. Bullish chart still, embedded reading. This rules my day. This lost the embedded reading. VIX. Never could get to that lower Bollinger Band, and I know I said yesterday, I thought if it did, regardless of what happened, I thought the pros were going to write some puts against it. Instead, what the market did is if you look at yesterday's action, you had an outside day up, then you came through today's low and came right back at those highs. So yesterday's high was 1395. Today's high is the same high. It's a very strange market because I hope they're not duplicate dates there. Yeah, they are. This is what the market did today. I have no idea what's going on with the settlement price there. I apologize for it, but I caught it for you. The market yesterday had an outside day down, and that's what I recalled. If you take out the high of an outside day down, I'm looking for the closest of a key moving average. So when I was looking at the market today, I'm going, gee, the VIX is throwing out one signal, and I'm looking at the Dow going, that's the weakest, clearly. The other indices are still okay. If it gets to the 18-day average, we'll see what happens, but that seems to be what it's trying to say. It did not lose its embedded rating. We'll see if it can get up to it. Then we get to the Nikkei. I've asked you if you wanted me to do any markets. We had one of our subscribers to my morning research ask me that, and I said, I'll put it up for you. So here's the DC Nikkei. Now, this is the yen-dominated one. And the pattern is you've lost your, you've lost your swing line that was pointing higher. Now, if you look today, you saw the yen go up about 80 points. And there was a reversal where it had been in a downtrend. It jumped rather dramatically against the dollar. That's a big jump. And it also signaled today, and if I come back here, you had been in an uptrend till yesterday. Then we pulled back. Yesterday's low was 227.50. If I come back here, this low was 227.10. So you still had, even with the pullback, the higher lows, higher high pattern. Now if you take that out, which you had an outside day down to do, you've lost it, and until today's high is taken out, the swing lines turn down. But what rules the day is the embedded reading. If that's lost and the market turns under 80, then I'll make an argument that price and the 18-day average are likely trying to get themselves together. In the T-bond market, the market had been, as we could see here, in a downtrend for this long period of time. I'm the first to tell you that I was writing in my news updates, I don't get why the market didn't get a rally going into the FOMC meeting on Wednesday. And this is how you finish. You had a rally by day's end of 29 points. It's today that, whatever the reason, it could be the trade talk, it could be the impeachment inquiry vote. The market got over the last high, negated its downtrend. You're in no trend now. You've got a lower low, higher high. You lost your embedded reading too. If I come back to yesterday, you had not lost it. You lost it this morning, and that set that part up in the market. If I come to the 10-year notes, same thing. You were in your downtrend. You still had the embedded reading. When you lost it today, price and the 18-day average made their run at each other. Now I'm neutral in this because I've got the higher high and a lower low situation. TLT, same situation. If we come to yesterday, let me come back and then to it. Here we go. I can get rid of it that way. Lower highs, lower low. You're seeing what's coming on through here. Boom. I go neutral now in those markets, and that fit in today with the fact that we were seeing that risk on go to risk off mentality, and you saw markets coming apart today. Dollar index, all you did is rally up yesterday, and we had talked when you lost the embedded reading back here to that number, you fell back to the 100-day average. I wouldn't be surprised if tomorrow you're playing at that 100-day, but if this market wants to build momentum to the downside, somewhere along the line that lower Bollinger Band might come into play. Right now, I don't see a trend. I have a higher high, lower low in that market. In the eurocurrency, you went down 2 days ago and yesterday to that 18-day average, popped up, but you're not trending. You have a pattern of a lower low, higher high, two levels of pretty serious resistance at 112.24 and 112.34.5, right? The 100-day and the upper Bollinger Band with support back under the market right through here. In the British pound, uptrend, reading. If we look at the slow stochastics, both numbers over 80 today. Both were not over yesterday. Just an overbought condition. I'll let more take place. I don't like overbought conditions. We know what this market's about. It's about December 12th's vote, and we'll see if Mr. Johnson can get control of Parliament or not. Otherwise, this thing's another mess. In the Japanese yen, you had this morning the Bank of Japan announce its monetary policy, and they did as the market thought. They did not lower interest rates. They said they might if the conditions warrant. For whatever reason, the market took off. Once it started coming back up, game over, and you went to that 18-day average on the lost embedded reading. I don't know if there's legs to this market or not to the upside. What I see is a lower low, higher high, and here's what I saw. Coming in, we had an outside day down. My instincts are immediately, that's the high that should not be taken out, and when you took it out, you went to the 18-day average of closes. Bitcoin, as I've said, you just pulled back under the upper Bollinger Band, and now you're waiting to see what the next event is. You have a market with a reading of 70.85 on the red line. That number is overbought. The pattern, lower low, higher high. Don't know what to do with that. In Brent versus WTI crude, market's hanging at that 18-day average. It gets under it, comes back over it, comes back. Just seems to be playing with it, not going anywhere different. I know that the EIA had talked that this might narrow eventually into the $3 range or so, but it's hanging there pretty good in the mid-5 range. When I come over to Brent itself, well, if we take a look, you had a market here that was getting its embedded reading. It loses it. That often leads to price in the 18-day average or the closest of the average under it when it's lost. Now, if we go back to yesterday, this is Tuesday. Yesterday, you had already hit it, and that's what I said to you. I said, I don't know if it's going to make a run for the 18 or not since it's already hit the 100-day. It decided to go to the 18 and hang in there. You now have an overbought market in an uptrend with two layers of resistance above it. The settlement today of 59.44 is underneath, from the looks of it, that 18-day average, but the swing line's up. I don't see anything there. When I come to the crude oil in the WTI, that was the Brent, this WTI. Battleground, 54.11's the last trade. That's right under the 18-day average. The swing line's up, but overbought market in a correction phase. Gasoline market. Yesterday, what happened in this market is on the close, you lost the embedded reading. Now, this morning, if you're one of my subscribers, I pointed out a trade at the 6 in the morning update. And I was recording, and I used pivot points to show an idea of what I thought could happen in the market. And as it turned out, it worked out pretty neat, and the market went right down to that 18-day average, and as you can see, hanging in there and holding it. Again, you've lost the embedded reading. You don't have a trend here. You have a higher high and a lower low. Nat gas, we're snowing like mad in Chicago. I'm sure if you turn on the Weather Channel, you're going to see we're breaking all kinds of records for a Halloween. I don't think the kids are going out for trick or treat. It looks like a middle of December snowstorm out there. The accumulation, the ground is going to be too warm for us to get mounds of it in the city. The suburbs probably getting 3 to 5 inches. But you pulled back. The market had been above the upper Bollinger Band. It's overbought. The trend is up, but it's in need of correcting that overbought condition. As I said, the pivot points. Now, let me explain what these are. This is a formula, and that's the right word that I want to use, a formula that I didn't come up with. This has been around for 35 years that I know, 30 years easily. And in the formula, to make a long story short, you're using the range of the previous day, you're taking it and you're trying to find resistance and support zones via that. So it tells you how to take the previous day's high, low, close, add them up, how to subtract the ranges from that to get to what we call resistance points above and support points below. That's why they're called S's in resistance. There are times when the pivot itself also becomes a key number. It did, in my opinion, when you lost the embedded reading, and that was the most I was looking for on the way back up today. Could have gone to the other cell, but cell one, the resistance, cell one right here, the resistance one, but no. And what it did is it fell back into the support zone. That's all I cared about in the trade. And as it turns out, I've got 3-part video that shows you how to work with these numbers, what I think of them, and how you apply them with momentum via the slow stochastic. So how do you do it? It's free. It's on our free offer. So all you need to do is go to our website, www.iraepstein.com. You're going to see free offers. Click it. You'll see this, the Arun indicators there. I'll probably put up more indicators as time goes by for you, doing some other things with these special video reports right now. But that's all you need to do. If you're watching me on YouTube, you can click this icon. That'll take you there. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.